Madam Speaker, I rise in strong opposition to this resolution. I yield myself such time as I may consume.
Gentleman is recognized.
Madam Speaker, earlier this week, President Biden met with financial regulators. From the four-sentence recap released by the White House, we know one of the topics they discussed was, quote, promoting financial inclusion and responsibly increasing access to credit, end quote. I agree with that concept, and I think we all should agree with that concept. Unfortunately, my Democrat colleagues here in the House and the Senate don't seem to be on the same page with the Biden administration. This resolution we're considering today would actually make financial services more expensive and credit less available to consumers and to small businesses and families across the country. So why are my Democrat colleagues strong-arming this resolution through Congress? Well, the answer is pretty simple. It's politics. That's what it is. Let's call this what it is. It's blue states and their left-wing so-called consumer protection advocates who want to, again, limit the reach of national banks and partnerships under the guise of, quote-unquote, consumer protection. Democrats are more interested in scoring political points with left-wing activists than supporting the borrowers and small businesses that this OCC true lender rule helps. We've witnessed Democrats work for decades to limit the scope of national banks through one measure or another. Well, the National Banking Act was signed into law in 1864. We have national banks. We've had national banks for 157 years in this country in the way that are similar to today. What they're striking at is opposition to what we've lived with for over 157 years of well-regulated national banks doing businesses across the country. The left, my colleagues on the opposite side of the aisle, will provide misleading statements about interest rates and spurious arguments about state versus federal regulation. They'll argue consumers are harmed, and this so-called partisan rule that they're driving invites bad banking practices. Above all else, my colleagues across the aisle see this as an opportunity to rebuke the last administration simply because they don't like the former president. I understand that. There's plenty of debate about that. But we should not tinker with existing law that is longstanding and predates this president or any other president. We should be talking about the contents of that law. Well, I'd like to remind my friends as well that it was the Obama administration who supported the risk management principles underlying the true lender rule. It was an effort to regulate, to ensure that instead of having shadow banking provide these services, that you have well-regulated consumer protection laws at the federal level as a part of this process. So once again, we have the opportunity to come together to support good bipartisan policy, rather than doing what the Democrats would rather do, which is appease the woke left. So let's stop the political theatrics and talk about what the true lender rule actually does, not what my Democrat colleagues claim it does. The rule specifies that when a bank makes a loan, the bank is the true lender as of the date of origination, if it is named as the lender in the loan agreement or funds the loan. That loan would be regulated by the entity making the loan, funding the loan, and the regulation would fall upon them. So the consumers have federal consumer protection laws that would act on that loan. That's what it does. And my friends who created the Consumer Protection Bureau, I thought you wanted that. And yet you're arguing against that with this rule today. Well, it's pretty straightforward. It's a pretty straightforward law. It shouldn't be political. And this rule also clarifies that as the true lender of a loan, a bank holds the responsibility to comply with federal law. This eliminates the greatest risk associated with abusive rent-a-charter schemes, which we agree are bad. And I think we could be doing something about that rather than this spurious argument we have today. In October of last year, the OCC finalized the true lender rule that is being debated today. This was the second step in a decades-long process to clarify the banking third-party relationship when issuing a loan. It's been long-standing practice, but there have been lawsuits, a great deal of uncertainty about it, a lot of questions in particular jurisdictions around the country and the nature of those partnerships. and it clarifies those partnerships in a rules-based regime. This legal clarity provides banks and fintech partnerships and enables them to provide their customers with the financial products they want and need. Consider this. According to the New York Federal Reserve, 1 in 4 African-American-owned firms used fintechs to access PPP loans. 1 in 4. And they did so using this legal doctrine that enabled that to happen in partnerships with national banks. Technology helps create greater financial inclusion. So why are my Democrat colleagues so afraid of technology, so afraid of innovation? Per usual, my Democrat colleagues are willing to ignore facts in favor of myths that back up their preferred narrative. That's unfortunate, especially for something this important. The left likes to say that banks can charge whatever interest rate they want. That's simply not true. Federal law gives national banks and federal savings associations the same authority that state banks have regarding exportation of interest rates. Now, both federal and state chartered banks must conform to applicable interest rate limits in those states. States retain the authority to set interest rates, which varies from state to state. Here's another myth. Third-party bank partnerships will use this rule to skirt state supervision and usury laws. Simply not true. The truth is, banks primarily partner with third parties to reach additional markets, benefiting from a particular expertise or technology to improve their efficiency. Partnerships with third parties do not change the bank's authority or expose interest rate differentials. And last but not least, progressive activists cite the interest rate as the real problem with the true lender rule. They're pushing a 36% best rate cap. They've even pushed it at the national level. The math simply doesn't back up this falsehood. The true lender rule was not some sinister plan by the previous administration to trick borrowers. It was not. Simply not the case. This legal principle was established in 1864 with the National Banking Act. It is being undermined by an attempt at politics rather than sound policy. And what we should support is good bipartisan policy that provides clarity to banks and fintechs so they can better serve our constituents and the consumers of America. That's it. We have a well-regulated banking system. We do. It's not perfect. We have states that have various laws that are operable in their states. But we also have a national system here as well. And we've worked harmoniously, not perfectly, over the last 157 years since we established a national banking system. But why undermine a key principle of that national banking system by spurious arguments that actually don't have to do with the true lender rule? They don't. There are other elements that the left opposes that actually on a bipartisan basis we oppose, but true lender is not it. It is a question of whether or not the bank that is providing you the loan is in fact the true lender. That is it. It is not fancier than that, people. That's what it is. And that's what we're arguing about today. And that is kind of the absurdity of the stuff that we're debating right now, because it is that simple. So let's promote financial inclusion the way that the president outlined, which was promoting financial inclusion, making rates more competitive and the cost of credit cheaper for individuals. Let's do that. Let's oppose this resolution before us so we can have sound principles, so we can drive that inclusion that is necessary and very important. And with that, I reserve the balance of my time.